Welcome to our channel. Dividend investing is a popular investment strategy where an investor invests in stocks that pay regular dividends to shareholders. Dividends are a portion of a company's profits that are distributed to its shareholders. Dividend investing can be an effective way for investors to generate income and build wealth over time. In this video, we will discuss dividend investing and its benefits in retirement. As we dive into the benefits and risks of dividend investing, do subscribe to our channel for actionable money and wealth planning advice in our subsequent videos. Let's get started. Part 1. Understanding dividend investing. Dividend investing involves investing in companies that pay regular dividends to shareholders. Dividends are a portion of a company's profits that are paid out to its shareholders. Companies that pay dividends are usually established and profitable, which means they are less likely to go bankrupt or experience significant losses. Dividend stocks are often considered a safer investment option, as they provide a consistent income stream and have the potential for capital appreciation over time. For instance, let's say you own 100 shares of a company that pays an annual dividend of $1 per share. That means you can expect to receive $100 in dividend payments for that year, 100 shares times $1 per share. Now, let's assume that the company pays its dividend quarterly, which means it pays out 25 cents per share every 3 months. In this scenario, you can expect to receive $25 every quarter, 100 shares times 25 cents per share. Dividend investing can be done in a few different ways. One way is to invest in individual dividend-paying stocks. Another way is to invest in dividend-focused exchange-traded funds, ETFs, or mutual funds. These funds invest in a diversified portfolio of dividend-paying stocks, providing investors with exposure to a range of companies and industries. Part 2. Benefits of dividend investing in retirement. Dividend investing can provide a range of benefits for investors in retirement. These benefits include 1. Consistent income stream. Dividend stocks provide a regular income stream for investors. This can be particularly important in retirement, where investors may need to rely on their investments to supplement their income. Dividend stocks can provide a steady stream of income that can help investors meet their financial needs. 2. Potential for capital appreciation. Dividend stocks also have the potential for capital appreciation over time. As companies grow and become more profitable, their stock prices may increase, providing investors with capital gains in addition to their dividend income. 3. Lower volatility. Dividend stocks are often considered to be less volatile than non-dividend paying stocks. This is because dividend-paying companies tend to be more established and profitable, which makes them less likely to experience significant price fluctuations. 4. Inflation hedge. Dividend stocks can also provide a hedge against inflation. Dividend payouts tend to increase over time, which can help investors keep pace with inflation and maintain the purchasing power of their investments. 5. Tax advantages. Dividend income is often taxed at a lower rate than other types of investment income, such as interest income or capital gains. This can provide investors with tax advantages and help them keep more of their investment income. Some information on the top dividend-paying stocks in America according to recent data. 1. Apple Inc. Apple has consistently been one of the top dividend-paying stocks in the U.S. According to data from Yahoo Finance, as of April 2023, the dividend yield for AAPL is 0.56%, and the annualized payout is $3.72 per share. 2. Microsoft Corporation. Microsoft is another tech giant that has been paying steady dividends for years. As of April 2023, the dividend yield for MSFT is 0.80%, and the annualized payout is $2.72 per share. 3. Johnson & Johnson. Johnson & Johnson is a healthcare company that has been a reliable dividend payer for decades. As of April 2023, the dividend yield for J&J is 2.33%, and the annualized payout is $4.54 per share. Part 3. Disadvantages of dividend investing in retirement. While dividend investing can offer a number of benefits for retirees, there are also some potential drawbacks to keep in mind. Limited potential for capital appreciation. One of the main drawbacks of focusing on dividend investing in retirement is that it can limit your potential for capital appreciation. Companies that pay out high dividends may not be reinvesting as much money back into the business, which can limit their growth potential. This means that while you may be receiving regular income in the form of dividends, your overall portfolio value may not be growing as quickly as it could be. Risk of dividend cuts. Another potential risk of dividend investing in retirement is that the companies you have invested in may cut or reduce their dividends. This can happen for a variety of reasons, such as a drop in profits or a need to reinvest more money back into the business. If you are relying heavily on dividend income for your retirement, a dividend cut could have a significant impact on your financial situation. Limited diversification. Another potential downside of dividend investing is that it can limit your diversification. If you focus too heavily on high dividend-paying stocks, you may not be properly diversified across different industries or sectors. This could leave you vulnerable to a downturn in a particular industry or sector, which could negatively impact your overall portfolio performance. Market volatility. Finally, it's important to remember that dividend stocks are still subject to market volatility. While they may be considered more stable than growth stocks, they can still experience significant price swings depending on market conditions. This means that if you are relying on dividend income to cover your living expenses, you may need to be prepared to weather some ups and downs in the market. That being said, dividend investing can be an effective strategy for retirees looking to generate income from their investments. By investing in companies with a history of consistent and growing dividend payments, retirees can secure a steady stream of income that can help supplement their retirement income and provide a sense of financial security. While dividend investing can offer many benefits, it is important to approach this strategy with caution and do your due diligence before making any investment decisions. As with any investment strategy, there are risks involved, and it is essential to have a well-diversified portfolio to help mitigate these risks. Overall, dividend investing can be a valuable tool for retirees to help them achieve their financial goals in retirement. By focusing on companies with a track record of consistent and growing dividend payments, retirees can generate income while also benefiting from the potential for long-term capital appreciation. With the right approach and a well-diversified portfolio, dividend investing can help retirees achieve a financially secure and comfortable retirement. Dividend investing can also help protect against inflation. As companies increase their dividends, they can keep up with inflation and provide a steady income stream that retains its value over time. This is especially important for retirees who may be relying on their investment income to cover their living expenses. Furthermore, dividend investing can be a good strategy for investors who are risk-averse or looking for a more conservative approach to investing. Dividend-paying stocks are often established companies with a track record of stability and consistent earnings. By investing in these companies, investors can benefit from their steady income stream and potentially lower volatility compared to growth stocks. Do keep in mind that dividends are not guaranteed and can be cut or suspended at any time. This can happen if a company experiences financial difficulties or decides to reinvest its earnings in growth opportunities instead of paying dividends. Investors should be prepared for this possibility and have a diversified portfolio that includes a mix of dividend-paying and non-dividend-paying stocks. Many established blue-chip companies, however, seem immune to this concern. Also to keep in mind is that dividend investing in retirement may not be appropriate for all investors. Those who are more risk-averse or who require a higher level of income may prefer other investment strategies. Additionally, investors who are already heavily invested in dividend-paying stocks may need to diversify their portfolios to avoid overexposure to a particular sector or company. In summation, dividend investing can be a valuable strategy for retirees who are seeking a steady stream of income and potential long-term growth. By focusing on high-quality dividend-paying stocks and reinvesting those dividends over time, retirees can potentially generate significant returns while minimizing their risk. However, it is important to carefully evaluate the potential risks and drawbacks of dividend investing and to consider whether it is an appropriate strategy given your individual financial situation and goals. Always discuss your financial circumstances with a trusted, licensed advisor in your jurisdiction.